Welcome to today's market report.
Wall Street shuffled to a modestly higher close on Friday, and Treasury yields advanced as investors digested a deluge of economic data ahead of the Christmas holiday long weekend, capping a week fraught with worries over the Fed's restrictive monetary policy and related recession fears. All three major U.S. stock indices ended the session grain after waffling through much of the session, with investors showing little conviction as a raft of indicators pointed to economic softening, evidence that the Federal Reserve barrage of interest rate hikes were having their intended effect. Everyone's waiting for 2023 to have a fresh take again. For the week, the S&P 500 and the Nasdaq posted their third straight Friday-to-Friday losses as the remaining trading days in 2022 tick away. All three indices appear set to close the books on their steepest annual percentage plunges since 2008, the darkest year of the global financial crisis. This was the year where diversification failed and everything sold off together, a Max Payne year where both bonds and equities sold off. A slew of data from the Commerce Department and the University of Michigan showed that while inflation appears to be cooling, so is consumer spending, which accounts for about 70% of the U.S. economy. New home sales posted a surprise gain and consumer sentiment brightened, but the data did little to move the needle regarding Fed policy expectations. European shares followed their U.S. counterparts down and up, and eventually ended the session nominally higher as economic jitters wrestled with strengthening healthcare and banking stocks. The dollar index fell 0.11%, with the euro up 0.22%. Euro-dollar is trading at 106.16, while the cable was at 120.
This is today's market news. Thanks for listening. We'll see you next time.